So the 16th largest bank in America has just failed, and billions of dollars are lost for good, which makes it the second largest bank failure in US history. So today I'm going to cover what happened with the bank failure of Silicon Valley Bank, and will this spread to other banks, and ultimately, is your money safe? And then what you can do to make sure that you are protected. And at the very end, I will go over the 10 most likely banks to have the same situation as Silicon Valley Bank, according to Bloomberg. So let's talk about Silicon Bank and how they failed in just 48 hours. Their bank failure was ultimately caused by a run on the bank, otherwise known as a bank run. At one point, even the CEO of Silicon Valley Bank was calling clients to assure that their money was safe. Let me explain how Silicon Valley Bank got here in the first place. Silicon Valley had $212 billion in assets in Q4 of 2022. And at the time, the bank had $175 billion in deposits from customers. These customers are like you and me, or small businesses, or even big businesses. But this isn't the bank's money. It is simply deposits made by the customers, which means the bank still owes this money to customers if they want to come get the cash out of their accounts. But also, the bank is allowed to invest a portion of that money into assets. After all, the bank is still here to make some money at the end of the day. So SVB has invested about $212 billion, and let's just say they invest in bonds, commercial or residential mortgage-backed securities. Well, what happens when the Federal Reserve starts raising interest rates, which, by the way, has been happening, and it makes the bank's investments, what I just talked about, significantly drop in value. And then when these deposits decline just 20% in value, SVB deposits are now worth more than they have in assets. This is what we call bank insolvency. So once people got wind and companies heard about this, they started to try to take their money out of the bank. The Founders Fund were the first to point out the red flags of Silicon Valley Bank. They knew that if the bank didn't have enough money to pay for all the depositors, this would be the start of something very bad. Well, thousands started to try to withdraw their money from the bank at the same time, and this is what led to the bank run. And a bank run happens when enough depositors withdraw all of their money out of the bank out of the fear that they will run out of money. But this results in others running to the bank to pull out all of their money, and you can see how this is a domino effect that just gets worse and worse and worse. And it really comes down to a first come first served basis, because once the bank runs out of money from giving it to the first depositors, then they run out of their money. This even created such a panic that police were called to various branches that had customers freaking out because they thought they may have lost their lifelong nest egg. And this is when the bank effectively has completely failed. They shut their doors and they are no longer in operation. But in my opinion, something fishy was kind of happening. The CEO sold his $3.6 million worth of shares just 11 days before the collapse. But he was also on phone calls with customers saying that their money was completely safe. So I'll let you do the speculating on that one. So you may be thinking the government insures banks for this reason. After all, America has adopted the motto, too big to fail. But that is only partly true, as the FDIC only insures $250,000 per account. So anything above $250,000 could essentially be lost for every single one of SVB's customers. And Bloomberg Market reports that over 93% of the bank's deposits are over $250,000. So let's say you're an individual or a company and you have $10 million at the bank. You will receive a check for $250,000 and the other $9 million will be gone. And ultimately, this is a huge blow for SVB, as they were funding hundreds of startup companies, hundreds of small businesses, and are now facing a complete loss of everything. A startup CEO, Gary Tan, said that this could set startups and innovation back 10 years or more. And this still has large impacts on companies that even maybe you have heard of. Roku lost 26% of their cash for about $487 million. Etsy has been forced to delay vendor payments. Roblox lost $150 million. Sunrun lost its loan funding. And Circle lost $3.3 billion and even triggered a 12% drop in a stablecoin that is designed to be stable. BlockFi reportedly lost $227 million that could be gone forever. So this SVB bank collapse, is this just a one-off event, or should we be more concerned about what's to come for the economy? Former Treasury Secretary Larry Summers says that the consequences will be severe if regulators don't handle the crisis correctly. And venture capitalists who are facing bankruptcy from the failed SVB are blaming regulators, and they're basically playing the blame game. And honestly, people had the right to be concerned. Bank runs basically caused the Great Depression, and the 2008 had plenty of bank run issues, so naturally, people are going to be concerned and don't want to lose everything that they worked so hard for. U.S. Treasury Secretary Janet Yellen said, that no government bailout is on the table. That's because thousands of firms will be losing lots of money, not just little firms, and this equates to billions of dollars. And people are upset because people claim that the bank is too big to fail, and it is not fair to depositors that will be having to lose money over this banking issue. So it happened to SVB. Can it happen to your bank, and is your money safe? As a general rule of thumb, as interest rates increase, the banks face more risk. As their assets go down in value, they face insolvency issues like what happened to SVB. So not to scare anyone, but to say that other banks aren't facing these same hard times issues, I don't think is true. At the very end of the video, I'm going to cover Bloomberg's 10 banks that they think have weak financials and are in a similar position as SVB. And these banks are typically smaller banks, as smaller banks don't have to go through the same stress test as the really large banks have to go through. And these stress tests are issued by the Federal Reserve to make sure that they can make it through economic hard times with zero issues. But you got to keep in mind that Silicon Valley Bank actually passed their stress test, and they had a complete meltdown and failure. In fact, it's only the top 8 banks in America that get the strongest stress test to make sure that they can withstand something that SVB went through. They have more assets and are less likely to be in this situation because at the end of the day, they just have more eyeballs on them. So these top banks that are the safest are Chase, Bank of America, Citigroup, Wells Fargo, PNC Financial Services, Truist Bank, and Goldman Sachs. So these are the top largest banks in America, so they are going to be what's known as the safest banks. So on this next list, I'm going to be covering one of the most dangerous banks and one of the most likely to be in the same situation as SVB. If you're one of the customers at one of these banks, just do your due diligence and maybe consider moving to a large bank. So these banks that with weak financials are Customers Bancorp, First Republic Bank, Sandy Spring Bancorp, the Newark Bancorp, First Foundation Incorporated, Ally Financial, which may surprise a lot of people, Dime Community Bank-Share, Pacific Premier Bancorp, Prosperity Bancshares, and Columbian Financial Incorporated. Like I said, these are the banks that this same situation could potentially happen to. So if you find yourself at one of these banks, I would just consider looking elsewhere. So I basically have this video wrapped up, and then breaking news comes out that the government is indeed bailing out SVB. So all the information I said is still irrelevant, and I'm going to be making a new video about the bailouts coming out because they're not your typical bailouts, but it's still a bailout, and I'm going to kind of explain that and go through that process. So subscribe to learn more about that. This video is still relevant, and these bank failures are definitely scary. So subscribe to get more information and stay up to date. There's a link below. If you sign up to Webull, you get some free stocks. I'm going to see you guys in the next one. Stay tuned. This is getting juicy and kind of scary.